This is the Euro Yen on the 15. I'm currently involved with a flag pattern, as you can see, currently 8 pips up. I've got a 2-to-1 reward to risk on this trade, and I'm going to talk through my entry. Little bit different this one, because as you can see down here, we didn't quite come down to the trend line, and I'm going to explain why I've got involved with this trade. So what we need to do is delete everything off and go to the higher time frame. So we remove the orders. I'm going to put a structure level in down here where we've had all this consolidation for several days, just like so. And what you can see is we've violated this level of structure here, and we've kind of been in the middle of no man's land here, and other than this key area, should I say. And what happened is we had this big breakout after all this consolidation for almost a week. We saw this big bullish momentum breakout. With that momentum breakout, we can either see a continuation or we can see a hold and a reversal. Usually, because we've come off a level of structure here with this momentum, we would usually see a continuation. So that would be my bias on the dailies. So going to the 240, we can really see that this level has actually been held multiple times, multiple tests here, and then with that daily candle, boom, we had that big breakout. And what we saw is a couple of red candles, and at the moment it looks as though today's candle is going to be bullish. So dropping down to the 60, you can see that big momentum candle now really rallying there. 11 pips up on this trade. So what is it I'm then looking at? Well, if we draw out the trend, and I'm going to zoom out on the 60 here, see if we can fit all of this consolidation in. If I put a structure level in at the highest point, which is just here, then what we had is we had the market that rallied up to this point. We saw a pullback, and then we saw another rally, giving us officially a 3-point move and officially putting us in trend. So as I then drop down the time frames, I can look for entry reasons. Now, this flag pattern doesn't have the best pole, but we are in trend. This was the entire outside return here. So just to draw out the trend here on the 15 this time, we had a move higher here, a pull back, a move higher, then a pullback. You can see that pullback. There was a little double bottom just here within the wicks. You see if I can highlight this for you. Just there. And then from that point we saw a lovely rally. And then we saw the market adhering to this trend line. And with this trend line, we duplicate it once it's on the closes of the candles. And we're looking for minimum of 4 touches. So we had one, I haven't quite got it drawn out right, but 1, 2, 3, and this was the 4th touch. So why did I not get involved with the 4th touch? Well, the first thing is the majority of the time we turn within the outside return. Now this is the entire outside return. However, within the educational material, I do state that with these flag patterns, it's usually the wicks that we turn at. So you can see we've had the confirmation, we've had the 4 touches. I chose not to get involved here because we'd not come into the outside return. However, right here, we did come into the outside return. Now this trade is on the 15 minutes, so that means I am now allowed to drop 1 time frame lower, and you will now see my entry reason. Right here, guys and girls, right here. A retest within the previous outside return, and now I chose to wait for that double bottom to be confirmed. So if I bring back on the orders, right here, this candle was a confirmed higher high, higher close than the V point of the double bottom, giving us a confirmed double bottom. So I was able then to get stopped an ATR below the low. ATR is only currently 5 pips, so I'm actually 6 pips underneath that. I'm going to keep that where it is just to give me a bit more breathing room. And the other thing was, if I go to the 15 as well, if you look at the 15-minute when it actually closed, we did actually have, this was a breakout of the channel. You can see we're 15 pips up now. So that's why I chose to get involved with this flag pattern, even though the pole wasn't the most directional. We were clearly channeling, and I waited for my entry reason. And what I'm going to do now is I'm going to go ahead here and put on a fib from the swing high to the swing low. We're going to look for that 127. One thing to point out here, I cannot take these trades at psychological numbers. And if you look here, we actually fell short just by 2 pips from that psychological number. Now that's close enough for me to say I'm not going to take the trade, because usually we don't, these trades have a lower probability. However, I can take them when we have a rotation pattern down within the channel, and that's exactly what we did. So we're in trend, we had a confirmed rotation pattern, we had a confirmed breakout, so that was enough for me to go ahead here and take the trade. So targets here at the 127, because we're in trend I can play for the extension. And if we also look left, see if there's any structure, there is, but our targets are just before that structure level. So as we approach the highs here and we test them, I'm going to go ahead here and move to break even, and we will wait and see if we can get that breakout past that psychological number onto those targets. So what does it mean for the risk? Well, the risk here was 17 pips. The reward after front running is 34, so dead on a 2-to-1 reward to risk. Really rallying now at 19 pips up, and this is the reason why they call these breakout patterns. This would be great to see this thing just continue all the way on up and get those targets. And we're back for the update. Only a couple of minutes have passed since I've done the first part of the video. As you can see there, it simply just rallied. They are called break patterns, and that is what exactly happened. We broke out. So a lovely 34 pips, though for me it's a percentage of the account. I risk 0.5%, so that's a full 1% return for me on that lovely trade.